Hi and welcome to Swissquote's Daily Market Talk. It's Wednesday, May 7th. The news that the Chinese premier will meet Scott Bessent later this week rises hopes and increases risk appetite across the financial markets as the Fed prepares to announce no change to its monetary policy today. So we will talk about all that, but before we do, please keep in mind that opinions that I will be sharing here are my own, and this is not financial advice. So the futures are in the positive this morning on news that the trade talks between the United States and China could lead to progress as the Chinese premier will reportedly meet the US Treasury Secretary Mr. Bessent later this week to discuss about these tariffs. Now, it is possible and probable that we will hear significant cuts to recent tariff rates that the two giants impose on each other. But the tariffs are so high right now, so 145% for the Chinese goods imported into the US and 125% for the US goods imported into China, that even a significant improvement could eventually not satisfy the Chinese and actually continue to prepare for a potentially prolonged war right now. So the People's Bank of China freshly lowered its policy rate and its reserve ratio today in an effort to consolidate its monetary policy support to the Chinese economy that is actually seeing its activity levels slow due to the trade war. As such, the CSI 300 index was better bid this morning in China. The index is back to the April 2nd levels when Donald Trump, remember, blew the world's mind with his unreasonable tariff levels, while Hang Seng index in Hong Kong jumped above its 50-day moving average, although gains here remain fragile and are mostly given back at the time I'm talking here this morning. In the FX, the US dollar is slightly positive this morning at the time of talking as the sell-off against the Asian currencies look like it's cooling. Good news from the Chinese front could actually bring hopes and risk appetite back to the market for the rest of the week, and the latter would result in further recovery in the US dollar and potential further rebound in US equities as well. But note that uncertainty still persists because in America, Trump's meeting with the Canadian Prime Minister Mr. Mark Carney was less catastrophic than what it could be, but no deal is on horizon just yet. And on the European front, the European Union said that it would hit 100 billion euro worth of US goods with additional tariffs if there is no trade deal by the end of this famous 90-day negotiation period, on top of the 21 billion euro worth of goods that are already targeted. Meanwhile, and unsurprisingly, the US trade deficit hit a record high level in the month of April as a result of companies rushing to import goods into the United States before the tariffs become effective, while Canada's exports to the United States saw the biggest decline since 2020. In numbers, exports tumbled 6.6%, imports fell nearly 3% on reluctance from the Canadians to buy the US goods. And the good news for the Canadians is that, exports, so their exports toward the rest of the world, toward other countries, jumped nearly 25% during the same month. Yes, 25% is a big jump and almost fully offset the loss from the US trade front. So the loonie strengthened by almost 10 figures since its February low against the US dollar, and that despite a persistent fall in oil prices, similar to other majors out there that also saw their valuations surge amid the rising trade tensions. And this was totally unexpected at the start of this year. Mind you, the trade war was supposed to boost demand for the safe haven US dollar and the US treasuries, but the latter did not happen, alas. And as days go by, it becomes clearer and clearer that countries are not willing to play along, and Donald Trump is losing his influence, a situation which could lead to Trump backing off and some de-escalation. So the letter would come at a good time as the tariff crisis is taking a toll on US earnings forecast, as we talked about it yesterday as well. The companies actually keep insisting that the tariffs would be bad for businesses, and some even scrap their earnings guidance, their revenue guidance for the rest of the year because it's too hard to see what will happen tomorrow. So inside equities, all these uncertainties are not necessarily good for anyone, but we start seeing as well a divergence among the so-called Magnificent Seven companies of the US. So companies that are subject to complex supply chains and therefore the tariffs like Tesla, Apple, Amazon and Nvidia are actually under a stronger downside pressure than companies that market products that haven't yet been targeted by the tariffs like Google, Meta and Microsoft, for example. But although they seem like they're secure right now, note that these technology giants could also find themselves in the crossfire if tensions between the United States and the European Union were to rise again, because Europeans are coming after the US big technology companies with their regulators. On top of all this uncertainty, while Tesla sales in Europe continue to decline big time as a reaction to Elon Musk's political support for the extreme right political parties. So in numbers, sales in Sweden were down by more than 80% in April, 80%. And according to Electrek, BYD, so the Chinese rival BYD, outsold Tesla in Germany and in the UK in April, and the company's sales in Germany rose by, I hope you are sitting down right now, they rose by 756% in April. 756%, guys. So I think Elon Musk and his board get a clear answer. But anyway, any good news from the Chinese front may not help Tesla get better, but will probably open the door to other negotiations with other countries and hopefully good news on the trade front, as remember, Scott Bessent was saying just last week, that they will leave China aside for the moment and they will concentrate their efforts on their other trade partners and other trade agreements. But at the end of the day, well, the US will be talking to China and seeking a deal potentially before the others. So fingers are crossed, any good news would be welcome. Now, what do you do if you are a Fed president and you must decide on what to do with your monetary policy to at least not make matters worse in the middle of this uncertainty? Well, I guess you just wait. You wait to see if the trade negotiations lead to any trade agreements. You wait to see the impact, the real impact of the tariff uncertainty and potential deals or potential no deals on your growth and inflation metrics. You wait to see demand for US dollar and your US treasuries in this newly shaping world order and risk appetite from investors. And more importantly, you just avoid making your policy decisions in a hurry. So, the Federal Reserve that will be announcing its latest monetary policy decision later today is expected to bring no changes at all to the US monetary policy, and the Fed President Jerome Powell is expected to say that they will monitor the market conditions and economic data carefully before announcing the next rate decision. So, make no mistake, what Jerome Powell will say today in his post-decision press conference is more important than the decision itself. If Jerome Powell still thinks that the tariff-led inflation boost could be more than just temporary and should be addressed accordingly, obviously, the US dollar and the US equity markets will not like the news. If, however, Mr. Powell softens his stance to join other Federal Reserve members in showing at least some willingness to give some monetary policy support to the US economy, we could then see sentiment in US dollar and US equity markets improve. But the Federal Reserve is obviously not the only major factor that affects investor appetite these days. Whatever the Fed says or does, it is finally the trade news that will likely set the tone. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below, as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, day trading.